Welcome back to another episode of Decentralized Chain. It's Firoz, and in today's episode, we're going to cover some more of the market news. In fact, it looks like BlockFi were the ones that actually liquidated 3AC, but let's find out. Now, if you haven't already, make sure you hit the subscribe button below, hit the bell notification icon, come and join us in Telegram, follow me on Twitter. Plenty of content being shared on all channels, so don't miss out on some of the latest news that could potentially help you stay on top of the market. So, let's start like we normally do, sticking in, having a quick look at the market. To be honest, it doesn't remain that much unchanged from what we've seen in the last 24 hours. Bitcoin barely made much of a move. Obviously, we've had a bit of an up, bit of a down, but generally sticking in the same place. But saying that, we are gradually coming lower. And saying that, there are a few areas that potentially, obviously, if you're looking at Bitcoin as an investment opportunity, not financial advice, but here, if I was looking to ultimately scale into Bitcoin, we are getting closer to some of those levels that we might want to have a look out for. Currently, we're already here, which is around the 200 weekly EMA, which historically has always been an indicator of a decent place to pick up some Bitcoin in terms of long-term investments. Failing that, though, there are marks around what we have is the 17,000, which actually is quite a key figure as well, which a lot of the market seem to be eyeing up. And failing all of that, there are calls for around a 12K Bitcoin, which even if we sort of look at the chart, we can see that it has bounced off this area quite a few times. So it certainly can be seen as something that we could gravitate towards. Now, as I mentioned before, the 200 weekly moving average has always historically been a great indicator of where Bitcoin is potentially bottoming. But interestingly enough, we are now pretty much just a little bit underneath that. So is the bottom in? Let's see. I mean, the only issue here is that we have lots of macro indicators around us that are happening at the same time, which, necessarily haven't been here in previous dips that we've seen. So this is somewhat causing, I would say, a bit of nervousness in the market in terms of how much lower it could potentially go. But again, if you look at it from a higher time horizon, historically, it has proven to be a great place to start scaling your bids in for Bitcoin. Saying that, let's also have a look at the Bitcoin rainbow chart. And again, similarly, rainbow chart has been used in the past to pretty much indicate where would be a good opportunity to ultimately sell market tops. This time around, we didn't really get that blow off top that we were all looking for. And I think maybe this is the changing with times, that everyone's looking at all these indicators and somewhat, it's not quite happening because everyone's expecting it. But again, saying that, when we look at this rainbow chart, this blue area here is really what's been seen historically as a fire sale, meaning that should or had you had purchased Bitcoin in any of these blue areas, you would generally be up long term. And now we are dipping into it. The question really here is, do we dip into this and do we actually go lower? But interestingly enough, the actual edge of this arc here is sitting also at around $17,000, which is the one that I mentioned here, when $17,000 also seems to be quite an important figure across crypto in general, because there seems to be a lot of institutions where their margin calls are around that price point as well. So let's see. But as I said before, here we've got Zach Prince. Now, he mentioned here that BlockFi can confirm that they exercised in the best business judgment recently with a large client that failed to meet their obligations on an over-collateralized margin loan. Here, it feels like they are actually referring to 3AC. So obviously the drop that we did see with 3AC was pretty much called because BlockFi ultimately exercised their margin call here. But saying that, from what I understand, 3AC have also deployed further capital in order to bring some of those calls down as well for what's left. The other thing interesting is, it was mentioned earlier this week, is that Coinbase laid off around 1,100 employees, about 18% of his workforce, due to the bear market conditions. Now, one could argue that in this respect, Coinbase, you take on seasonal, when you kind of have those peak periods. So they've kind of pretty much pushed up how many people they need during that period. But now that we're kind of going more into a bear market, we are in a bear market, the need to have that many people are not there. But saying that, we're not seeing this reflected across the board across other major exchanges as well. Binance, for example, they're already actually ramping up here, and they are looking to bring further people on in terms of opportunities. And you just only need to look at the Binance job board, and you've got well over, from what I understand, about 2,000 roles just sitting there to be filled within Binance alone. So clearly, not everyone across the board, not all the exchanges across the board are feeling the pinch. And here, this kind of really gives me more of an idea of where Binance are heading in terms of the long term, because they are clearly looking to grow their organization, and they're bringing in relevant individuals in order to fulfill those roles, in order to do that. The same also goes with Kraken. Kraken are also have a hiring push. So they're also looking to bring further people on in order to grow and build as well. So it's not necessarily across the board. Just because Coinbase let them go, other major exchanges are not following suit here. They're actually pushing forward. So clearly we're going to see more innovation in this space, certainly from the exchange's perspective. Another one that we're also seeing now is USDC issuer Circle is actually introducing a euro-backed stablecoin in the US. So we're going to have, as we have USDC, I believe they're going to be calling it EUROC. So this will be euro stablecoin backed, basically. And then this is good as well, because at the end of the day, I think the stablecoin market in general has had a bit of a negativity over the last month or so, certainly with the Luna fiasco that we saw. And everyone was pretty much doubting the position and place of stablecoins. But those that are actually backed by physical hard currencies, cashes in reserves that can show that they can back it for one-to-one, generally you've got nothing to worry about. But then you do see a bit of depegging when you see some of that FUD coming up. The other one, which I thought was pretty cool, is that Solana is introducing new gas fees. And they've said that it won't make the network expensive. Now, what's the difference here? The difference here is with Ethereum, when the network is congested, everyone feels the brunt of it. Everyone's feeling the high gas fees. Even if you're interacting with a dApp that doesn't have that much usage, you're still being hit with the same gas fees as everybody else because the network's congested. But interestingly enough, Solana in this case, actually what they're doing is the way they're implementing these upgrades. In fact, what really stood out is that it's not a fee that applies across the entire network. Instead, the gas increase or the gas fees will actually be on the in-demand apps and services. So somehow through this new upgrade, they're able to pinpoint exactly what is causing the congestion in their network, and those dApps and services will then actually have the higher gas fee introduced within that, whilst everybody else who may well be enjoying their favorite game on Solana, although Solana fees are pretty much non-existent anyway, they can continue to do so, which is quite good. The other one that I think we should definitely watch out for is Animoca Brands. They've acquired one of the most educational tech companies called TinyTap for $38.9 million. Now, the way I read this article and the way it stands out to me is that TinyTap is obviously an education content application. And so it's all around UGC, education video. Now, with Animoca, obviously, they're very large within the crypto space as well, very well known. And what I sort of inferring between reading this is clearly they've bought an educational app, which is TinyTap. Maybe these guys could be the TikTok of crypto, right? Because the idea here is that they're looking to obviously further onboard crypto education. And I think this is something that, certainly from anyone that's looking to create user-generated content to bring awareness to crypto, this is something that I would certainly watch out for, because I feel, or I'm getting the feeling of a crypto TikTok here, which is purely creating lots of crypto education content, whether it's 1 minute, 2 minute, 3 minute videos about crypto and getting it out there. So certainly one to watch. Anyway, that's the news for today. If you like the content, then certainly subscribe to the channel below, hit the bell notification icon, come and join us over on Twitter. Follow me. I say follow me on Twitter, come and join us over in Telegram, and I will see you on the next episode.